Okay, this is the market preview for the 6th of October. And so this is let's jump right into it. This is the 50, just to get the video caught up to speed. This is the 50-60 retrace from swing low to Monday's high. There's a good chunk of volume sitting right in front of that 50 retrace, that 1920 and a quarter. I would expect responsive buyers first time in. It's unlikely that we get there today, and it's even more unlikely that we get to 1905. We're going to have a complete reversal. Is it possible that we get a complete reversal? Yeah, we can get one of these bars in here, but it's hard to see what would drive that. I'm not looking for that. I'm looking for consolidation. So the answer to that question is I'm not worried about it. I don't think that we're going to get down into this area. So the key areas for today, if we have a day that mirrors yesterday in terms of range, right? 30 down from 74 would put us at roughly 44. That puts us right at the open gap right here. This is a key area. I would expect responsive buyers. My plan is into that open gap, half size, double stop, meaning an 8-point stop at the open gap. I'm looking for responsive buyers back to the upside. That's how I plan to handle that situation. It is important to know that underneath yesterday's low at 1955, that we are poorly auctioned, unauctioned underneath, and the market tends to like to re-auction the market. There's three ways that it can do it. It can just zip straight through, which is always a possibility. There's a problem. Okay, it can zip. So let's say this is our unauctioned area. Okay, we can simply zip through. That's the least likely option, but possible. The next option, which is the most painful, is a slow grind all the way through this, where there's no contra trade. It just slowly moves all the way through, completes the unauctioned area, and then lifts off again. That's the second most probable. And the most probable is this pattern here. We come in, reject off the top of the unauctioned area, push halfway down, come up for a backside test, complete the auction, and then move on back to the upside. That's the most probable that we have, probable likelihood that we have of how this area will get re-auctioned. Okay, from a trade perspective, again, when we get to this 1942, 1943 area, excuse me, the open gap, again, we need to balance this and check it off against the actual CME close. This is simply the 315 close that gets recorded here. Um, I want to be long here. It's a normal stretch. I would expect to push back up. Rotation size wise, I'm looking for a minimum of a 10-point rotation. Now, well, let me finish this and I'll go into that real quick. Let's look at the upside really quick, what we have to look at. Let's erase this. So the next thing I want to know is essentially this was one continuous move up. So I want to know what the 50-60 of that continuous move up was. And that puts that 50-60 sitting right here. You notice this 50-60 lines up with the larger picture 50 retrace. The 62 retrace lines up with the 50 again. When we get to 1920 and a quarter, guys, I'd have it on your notes. I want to be long from that trade area, okay? And then 1930, the 1930 area is the 50 retrace from this last 2 days move, and I would expect at least some type of response from that area, 1930 to 1932. First time in, you'll notice that zone is marked off on the charts. I would look for a response there, assuming we get past the open gap, which is unlikely today, but tomorrow or after we get initial reaction down, we could push back in, right? On the upside, let's get rid of this. So what do we have above? The open gap got closed yesterday, and you see we pushed a little bit behind it and rejected. Now, I didn't take the trade because I could already see that we were in similar mode from Friday, but normally that's exactly where I would have taken half size, 8-point stop, and you can see that at least based on where we are on the volume profile chart, that was at roughly 1976. We had a high of 1980. A 8-point stop would have kept you in well, and you would have gotten out at 1974.50 at latest the close. I think we actually rotated down to 1972 intraday. So Again, I didn't take the trade because of the price action, but the trade would have worked. It's worth noting. The swing high from the Fed from Fed Day was 2011. And if we continue to push up, that's an obvious upside target. It's unauctioned right in that little area, that 2009, 2011. And I would expect rejection out of here the first time in. And then if we go look to the left in bigger picture, right? We go look at bigger picture. What was prior and where we broke down from, and what does it seem from the crime? If we really get crazy extended to the upside, is this area right in here has acted, as you can see, multiple times as a support, basically from 2026 to 2045 is a major resistance area, and that would be my ultimate upside target. Again, it's very possible, we could do that in 2 30-point up days if the market gets really just grinding on up high, or we can get a grindy situation where we just keep grinding up every day like this. I don't know what the answer is to that, nor do we need to know what the answer is to that, right? The price action will tell us what we're looking for. So that concludes the major upside and downside areas. I'm looking for the market to be contained with between plus 25 to plus 30 for the day. I'm expecting responsive buyers in that area. So let's go through what we're looking for the day and how we're going to determine our inflection points. So the first thing that we're looking for is NQ and ES and sync. ES has been leading us. Generally speaking, NQ leads us up to the upside. So that's a bit of a switch, but it's not unprecedented and can last for a couple of days. But generally speaking, either NQ will take over, right? Or it'll pull ES back to the downside. We don't know. First clue, I guess I have this wrong here. Hold on a second. Let me adjust this. Why is it so off? Apologize, guys. Please adjust Monday's high. I don't know why I have it off like that, but we will fix it immediately. There we go. Oh, there we are. And now I have 79, 90. Hold on, I need to check. I see I moved this zone when I went back and checked. Hold on a second here. Let's go back and check price action. Okay, 85, 79, 83. See how this whole area is just poorly auctioned through here? And my concern is we'll grind up straight through there. There is a support resistance point at 85, obviously. I'll put it there, but my target is more 90, 92 than 85. But it is 10 up from where we closed. If you will add the zone, plus or minus 1 point at 1985, please. Let me put that in the notes real quick. Okay, 1 second here. Huh. Thanks, Jack. Hold on a second. Okay. So there we go. That's the only adjustment I need to make here. Okay, so what are we looking for as the market moves up to help us out? So first of all, what are the characteristics of the market from a contra day trading standpoint? We would like to see a 10-point range in the first half hour, right? We would like to see bars that have 5 points of range. Why is that important? So we get our scales off, right? We'd actually like some volatility in there. If we lack the volatility, we want to wait till we see divergence on the 5-minute swing indicator or tick divergence into the move, right? And it's easiest to simply wait the first half hour out, let the day pass, or let the beginning of the day pass, so that we have an idea of what the PA looks like. Yesterday's first half hour was pretty much had almost no rotations in it. You can see it was pretty much straight up, and it had a range of 1955 to 1966. So it was 10 points, but there just simply was no contra rotations in here. This is where we had both our shorts take place. This was the aggressive number 2 trade. That got stopped out. And then this was our highest odds number 4 trade entry, and we got 4 points worth of scale. This is our first scale was at +2, next scale was at +4, right? That's exactly what we're looking for again today is key location. And then you have to know within your own trade plan, is number 2 viable or is number 4 viable? Number 2 is going to have periods where it pays like hell, and it's going to have periods where it stops, okay, a lot. You just have to A, size correctly, and B, know where you're at in your trade plan and your consistency in taking the trade and which markets pay well. We probably should have surmised, looking backwards in my notes, with the lack of rotation in the first 30 minutes, that I should have waited for a trap number 4. And I will definitely make that adjustment today in terms of taking it myself. I will take the same setup if it occurs again. The thing that we did best yesterday was once we realized there was little to no counter rotations here, this is pretty much where we stopped trading. This was the last trade that we took in for the day yesterday, right? We want to quickly recognize when it's not our environment and step away. We want to see if NQ is trading in sync with ES, and we want to know, obviously, if we're bearish, first thing we have to do is get below Monday's low, right? That's the first step in going and making a move to the downside. Obviously, buyers are still in control as we're pushing to the upside out of the gate. We're currently trading 1976.50, basically right underneath yesterday's high for the open, right back into this mess. We want to see us get above this mess. If we're above this structure right here, we need to be below 1975.25. By the way, please adjust Globex high to 1977, guys, on this. And it'll probably push right into the open. So whatever that is, hold on a second here. Also, we'll have to adjust NQ as well. But the first thing we'll see is, are we trading underneath, since we're opening at the highs, are we trading and holding underneath Globex high? Very high odds that we'll press that or touch that right out of the gate. We want to see, can we clear Monday's high and Globex high? And then if we come back down, does both NQ and ES get below? Are they trading in sync? If they don't both get below Globex high, I don't want to get overly bearish. The next thing is I want to see the size, the most important thing for today, the size of the rotation and counter rotation, right? If we get this exact same movement and we retrace it all the way back down and we get one directional move to the downside, it doesn't do us any good as day traders, right? We'll just get run over as it's moving in a straight line. So the most important quality is going to be, are we getting the 5-point counter rotations so that we can rip out 2 or 3 points out of that and get our scale. So that's what I'm looking for today. Tick divergence on my 5-minute swing indicator, and whether NQ and ES are trading together. And that's really the summary for the day. The one thing I want to make a note as we're pushing to new highs here right before the open is this. The key quality in being a day trader, the promise of being a day trader is that you can make millions and millions of dollars, right? That's the idea. You can start tiny and there's unlimited opportunity. But the key to being a trader is the emotional resiliency of coming in with the day-to-day disappointments, because day trading is filled with this disappointments, and the emotional ability to stop trading as soon as the market does not have the qualities and characteristics that make you the most amount of money. You should have examples in your diary or your trading journal of what price action gives you the best results, and then go look for those qualities within the market. And if it's not showing, pull your horns back, wait till you get it, and when you do get it, pound the crap out of it, okay? And then when you are disappointed, don't ignore the disappointment. Don't let it build and stew. Write down, hey, I'm disappointed. I wrote down in my journal last night, I'm disappointed that the market has driven straight up so far with no counter rotations, giving me no opportunity to get long through this whole move, and only leaving me with difficult shorts, which basically I had to stop trading intraday. But on the plus side, I recognized that there was no rotations down, very little opportunity, and I stopped trading. 2 very big pluses. So that's my piece for the day. Day trading can be hard, and it's harder if you don't recognize which environment pays you. So let's go and look for examples or opportunities to see if today is one of the days where we'll have the type of rotations, the 50-60 retraces that we need intraday to get paid. We don't have to catch the first set. Once we see it working, we can adjust and pick up from there, right? 10-point rotations are key. 20 points has been the magic number all the way through for the last couple of really 2 months now. So 10 is important, 20 is key. 43, 12, 25 is what I have on NQ for Globex High. Please adjust your charts. Okay, guys, let's have a great day. I'm going to set up the rest of my charts real quick, and I will be right back.